Hey everyone, Andy Moss here, tradingadventures.com with your look at the weekly charts. And this is a big one because over the last several Saturdays, I've been noting some slight cracks beneath the surface. Even as the indices hold up fairly well near all-time highs, we've been watching things a level or two lower and noting some important sequences there. So this week, those cracks got a little wider. And so we need to look at that. We need to see what's coming next and what the markets are telling us. The SPY broke down below its now declining 10-week moving average. The Qs are testing their 40-week moving average. The Dow has given up its position of leadership, as have the small caps, and Bitcoin tried to ignite a rally, but so far that looks like a failed move. So a lot of things to go over here this morning. Let's jump right in. But real quick, before we do, I wanted to remind you that the Alphatrends sale is still open right now. It's going on through the weekend. You've got the option for a deep discount on an annual membership, or you can take a 2-week trial run if you want to. So if you've been thinking about coming over and want to see how Brian and I navigate this stuff in real time, the logic behind the processes, and how we actually put trades together and manage them throughout their life cycle, now is a great time to do. You can go to alphatrends.net/welcome Andy for all the details and take a look at that. And now let's jump into the charts. All right, looking at the S&P 500 first, and what we see, and I'll run through these pretty quickly. This is a further excursion lower, down near the lower Bollinger Band and below a now declining 10-week or 50-day moving average, and closing near the lows. So RSI has broken out of this long consolidation range here and is testing the 50% level. That will be key next week. Is can it hold that level, or maybe a brief dip below that recovers quickly? If not, then the next lower levels of interest are this anchored VWAP off of the June 25 breakout, followed by a rising 40-week or 200-day moving average down here near 66.03. Looking at the Qs, they actually held up pretty well, but they do have the rising 40-week here, and I've got a lot of lines on this chart, but let's focus on the price action. It put in a wide range here, but could not get above the declining 10-week moving average. The middle of the Bollinger Bands, the 20-week moving average is right there. We've got an anchor off a recent low. The bands are still tight and flat, so it's not total disaster, as we've got potential support levels here. But once again, RSI testing this 50% level after getting very close to that several weeks ago. So not a great sign to see it there again. Volume was very high. And moving on to the Dow 30, the spot that was leadership for so long has confirmed this failed breakout back in early February, just about a month ago. And now it is below a declining 10-week moving average. It's in the lower half of the Bollinger Bands. RSI is testing the 50% level, and it's got a reactionary bounce at least off the breakout anchored VWAP. We do have a rising 40-week and an anchored volume-weighted average price indicator off of the April 7th lows of last year below. Those are 465 and 462. In that neighborhood to watch. And the Russell 2000 IWM, several weeks of sideways consolidation here that finally gave it up, and much like the other three indices, they're now below the shorter term moving averages. The 10-week is still slightly rising here, but it's in the lower half of the bands. RSI testing mid-level. Volume was high, and we've got the similar points of interest below in an anchor off of this breakout and a rising 40-week moving average. So the indices all look very much the same, or very similar at least, and we're finally starting to see the failed attempts at new highs and resulting consolidation give way to lower prices here in the indices. Bitcoin tried to provide a little hope, and I'll move this arrow off the way. That was showing that it got rejected initially right at this anchor, and then did it again right. That's what I should do, is move up here. This line, 74,000 in this area, was the top for Bitcoin, which corresponded well with this low back in April 7th of last year when the overall market bottomed, and an anchored VWAP off of this kind of failed breakout attempt here back in mid-January. So Bitcoin tried but couldn't do it. The dollar gaining some strength. Is it a safety play? That's the question on everyone's mind. But it's just a year, almost a year now, of consolidation down here at these lower levels, and not a whole lot of action there. So the dollar is gaining some strength, but still nowhere near a trending environment. A notable occurrence overseas this week was the sell-off in international stocks. These have been the undisputed leader. We pointed out last week just such a solid, steady rise, steep 4-week moving average, week after week after week, with RSI up here to a very high level, and this week resolved a lot of that extension. We see the reading come from nearly 80 all the way to about 54. Volume was nearly double the average, which has already been coming for several months now. So some serious profit taking there in the overseas markets as we look at ACWX. And back below the 10-week, below this anchor from the November dip, and has some further points of interest below to watch into the coming weeks. Moving on into China, XI, it was already breaking down a little bit over the last couple of weeks below this trend line area and the moving averages, and that move lower accelerated this week, taking it out of the lower Bollinger Band, below this off of last April's low, and RSI down in the deep in the lower half here near 36 there, and volume was higher than average. Looking at bonds, the recent leaders kind of giving up the move here, still holding this trend line and a rising 40-week moving average, but definite selling, a gap down that closed lows or in the the lower 3/4 of the range. Once again, we see the famous RSI testing that mid. So, not a total breakdown yet, but certainly more pronounced selling than we've seen recently. Treasury bonds, TLT, some action there, but if we kind of extend, this is again, this chart's really messy with price chopping around on either side of things. But look at the Bollinger Bands for the big picture. Flat, wide, nothing happening there, but still holding up above a rising 10 and 40-week moving average if you can pick out the red and blue lines there in the mix. High yield bonds that were trading like stocks finally broke down, and that's notable. We want to pay attention to that. It's a gap down below all the moving averages, outside the lower Bollinger Band, below this anchor, April's dip, with RSI corresponding, and very high volume there. So we're seeing some definite change in pace, definite change in action on the recent leaders, and some areas of strength. One area that did not give up its gains, the commodity in ESG, is heavily weighted towards oil. Just a massive, massive move this week. And after we watched it try so many times to get beyond and stay beyond this roughly 23 level, we now see oil up. What's that? That's near 30%. 8 weeks when it finally got legs on this breakout, obviously prompted by the actions in Iran and the rest of the Middle East. Here is crude oil on its own. Very big move, large gap and go in volume, and RSI very high there. So we'll have to see what happens with oil next week. It's very extended now. Gold, a little bit of selling, but holding up just fine. It closed kind of in the middle of last week's range. It's still above all the moving averages. The Bollinger Bands are still pointing nicely higher, and RSI just chopping along up here. So nothing cautionary in gold, just kind of some normal price action there as buying power rotates around. Silver, a little wider as usual relative to gold, But once again, still holding right in the area of the moving averages. The band's still sloping nicely upward. And it's not extended here. After putting in this high several weeks ago, it's making progress, moving higher once again, but not running away. So that's the action on silver. Now we're going to look at some of our relative strength charts. The growth versus value chart, we see we see growth. Let me just break those out individually here. IWF is the growth portion of the Russell 1000, and IWD is the value. We see it sell off a little bit. And so, again, there's a change in action there as the relationship between these two sectors takes a bit of a break on the current move, which has been in the favor of value. So growth, not a big move here for growth stocks on their own, but relative to value, it is fairly substantial. And the RSI, the overall RSI here, we've seen a bit of a rise, a dip, and now another rise. And so once again, I want to point out that something that seems to have been a bit of a pattern on this relationship is multiple tests. So there's at least a decent probability that we see a move back in favor of value before this relationship really makes a stronger run towards growth. Anything can happen. That's what has been the pattern a few times previously, as we see here and here, here and here. And the same thing has happened on trips higher as well. So just one probability, or I wanted to point out there. Consumer staples, consumer discretionary, same kind of, I said that backwards. Consumer discretionary versus consumer staples is the relationship at here. And, not a change in trend, not even getting and staying above this level here, which was kind of a lid for the last several, but it is at least a near-term movement back in the favor of discretionary as buying power towards the staples takes a bit of a break. High beta versus low volatility continues to move lower. That's an indication potentially of risk on, risk off behavior or positioning as buyers favored the lower volatility areas of the S&P relative to the higher risk, higher beta areas, entering that relationship as well. And now some individual sectors. Here's the semiconductors. Pretty sharp sell-off here this week. The 4 weeks now declining. The 10-week is still rising. Prices very deeply below that. Testing this anchored VWAP off of the November lows and nearing the Bollinger center line of the Bollinger Bands here. So down, but some much more pronounced profit taking, certainly more so than we've seen for quite a while now, since back in early November of last year, actually. So we'll see. Can it hold this center line again and resume the uptrend, or do we see a couple more weeks of selling action before price moderates? And now I want to look at IGV. I noted IGV, it's a very bearish looking chart, but there is context here to support maybe a bounce case. So we saw things setting up for a potential bounce, and that's exactly what we got. This week, our sector rose sharply, and it's now up a little over 15% from last week's lows. It got above this anchor here, and now we'll be watching 89.75, 89.76. This is a recent high, or a not so recent high now that goes back several years, and then we've got an anchor off of this back in October 27, of October 25 that comes down and meets that. So that could be an important level going into the next few weeks as the 10-week falls down and catches that level as well. And the volume just incredibly high here. Lots of action, lots of focus on IGV. Looking at the Mag 7 as a whole, nothing in here. It's still testing, or once again testing, this anchor off of the April lows. It's below all the moving averages. The Bollinger Bands are opening to the downside. RSI continues to stay below the 50% level. And volume is very high as traders and positioners look for action there, but just not much going on yet. Beneath the surface A quick look at the individual names. Apple still consolidating in a sideways, a little bit of sideways range below a declining 4-week moving average. Amazon still struggling down here near the lower Bollinger Band. Google not breaking down, but certainly not making notable progress higher. Meta still stuck. Microsoft, much like the software sector, which makes sense, finding some support at this anchor from the lows way back in the beginning of 2023. No change in trend yet. It is above a 4-week moving average, but as it moves forward, we want to look at the declining 10-week moving average, and this anchor off the highs, that's up around 434 to 454, will be an area, if Microsoft can continue to go up, that could be a significant test, which also corresponds with, we can just draw a bit of a reference point in from these highs in late 2024. That's going to be an area to watch for Microsoft if it continues to rise. NVIDIA finally breaking down slightly and getting below the 40-week moving average, which is very close. This range just continues to tighten further and further as NVIDIA still lacks direction, and Tesla continues to slide gradually lower and lower each week, now on the 40-week moving average, which is basically flat here, with RSI below 50% and volume still light relative to the average there. So no action, or no meaningful action in Tesla at this point. And once again, as we wrap up the final days of the Alphatrends invitation, take a look at alphatrends.net/welcome Andy. Get your discount on an annual membership, or come visit us for a 2-week trial and decide before you make a longer term commitment there. This is where we put all of the market analysis and solid trading process and principles into place in real time right in front of you, so that you can learn and refine your process as well. And now back to the charts as we wrap it up with a look at breadth and participation. A little bit of a red flag here on the percentage of S&P 500 stocks above a 50 and 200-day moving average. We see the 50-day average count dip below the halfway level. It's now down around 43%, below the mid-level there, and the percentage above a 200-day moving average is down as well, around 55%, not quite in the lower half, but it's just showing us fewer and fewer stocks are participating in their medium and long-term uptrends as of the close of business. Okay, so another cautionary, potentially cautionary point that we want to keep an eye on. Now, as we move over to stockcharts.com, as I do every week to review the point and figure charts of the bullish percent indices, I want to take a moment to acknowledge the passing of John Murphy this week, former chief technical analyst at stockcharts.com. John was one of the true pioneers of modern technical analysis. His book, Technical Analysis of the Financial Markets, was part of the CMT study materials when I came through that course, and he helped educate generations of technicians included. His influence on the field has been enormous, and he will certainly be missed. So thank you, John, for all of your contributions over the years. Now, as we look at the bullish percent index on the S&P 500, we see some continued decline here. This all happened this week. We were in a column of X's last week, and now we've got a bit of a breakdown here as that count, like we saw on so many RSI measures, it's right here at 50%. It's just right in the middle of the range. And if looking at the NASDAQ 100 view, again, more moderation. It's still holding up fairly well, around the 58% level. It's still in a bull correction status, technically speaking, but we definitely see the selling having an impact there as well. And finally, looking at the NYSE, we see, it's a little 50%. It's come down here, been operating in a wide range for the last several months, and not a breakdown, but certainly seeing the selling and downward moves of recent times reflected there in the percentage of stocks on a point and figure buy signal. Now what? So what does all this mean as we head into next week? For the last several months, we've been dealing with a lot of choppy sideways market action. We can see on the expanded roadmap of the indices here, these are 130-minute candles on all four indices. And just, since before the beginning of the year, it's just been kind of rounding over, failure to make new highs, continued tests of lows that are now giving way to some further downside. That's been frustrating the bulls and bears alike, as we just can't seem to find direction. But now we combine that with the loss of leadership, a few key areas, some important breaks below moving averages, and the cracks we've been discussing beneath the surface. It suggests this environment is starting to shift. That doesn't mean we make bold predictions. It simply means we adjust to the information the market is giving us. If this weakness continues, we may start to see downside momentum accelerate over the coming weeks. That could mean being more cautious on the long side, potentially becoming more active on the short side than we have been recently. And as always, the key is going to be to stay flexible and let price confirm the next move. On the calendar next week, we've got a few meaningful events. We've got a CPI coming on Wednesday, which of course will be an important event. Later in the week, we have some housing data. On Friday, we'll get PCE and the JOLTS jobs openings data. So that's another cluster of economic reports that traders will be paying attention to. And on the earnings front, it's getting a bit lighter now, but we do have a couple notable reports. Oracle is coming, and Adobe, part of the software sector we discussed earlier, also be reporting there. So those could be worth watching given the recent bounce we saw in IGV. So heading into next week, the final takeaway is that the market is starting to show more signs of stress, and recent price action suggests risk is increasing, not decreasing. So that doesn't mean we panic. It means we stay disciplined, respect the trends and the price action, and focus on the levels that matter. I'll continue to share the charts, do the weekly analysis, and point those out best I can. So as we wrap it up here, one more time, a reminder that the Alphatrends sale is live for a brief time over the weekend. And so if you've been thinking about joining, come on over, alphatrends.net/welcome Andy. Take a look. There's a 2-week trial available, and of course a steep discount on an annual membership. So let me know if you have any questions. Thanks as always for spending some time this Saturday morning, and we'll see what happens over the next week. Enjoy the rest of your weekend.